Hi guys, I hope all of you are doing well. This is your Nifty Guy. Welcome to today's episode of Decoding Nifty with me. This is the series where we analyze and decode Nifty on multiple time frames and prepare a trade plan so that we can trade the following day with much more confidence and clarity. In case if you like the way I analyze Nifty daily for you, also planning the trade setups as well as explaining key price action concepts and principles that I personally use, please don't forget to like the video, subscribe to the channel, share it with your trading friends, as well as put down anything that you might have to say in the comments box. On that note, we'll first start with what we had planned for today versus what happened in the market, and then we'll plan the trade setup for tomorrow. So yesterday, what we had planned was we'll be looking for a long entry above this. We can expect some short-term pullback around these levels or till around this particular trend line as well. Uh, but we're not actively looking at shorting the markets. And if you can see, this is the level of support that I had drawn on the chart. And around these levels is where we got some good buying, decent buying from Nifty, wherein from the day's low Nifty moved roughly around 78, 86, 80 points, right? Uh, so it is not always necessary that the buying has to come exactly from this box. It can obviously breach this on the downside. It can also not touch it and still reverse. So the levels are just indication of levels. And obviously this was a good trade which could have been traded today. I was not trading today. I had some prior commitments. We have recently shifted our residence and I had some commitment with regard to address change in our official documents. And that was the reason of me not trading today. But this was a good place to go long based on this base formation. And once the high was taken out, a good trade on the long side could have been taken. But right now, see, I'll give you 2 cents about the market. What I feel right now is that there is a lot of trappings happening in the market, and the markets are quite haphazard and moving like a headless chicken. It is going in either direction and reversing with the same intensity. As you can see, it happened in the market today also. First, the market uh, again around here broke out, formed a new day high, immediately reversed, going down below this swing, immediately reversed, then again going back again here with a big red bearish candle, no follow through came in. Markets again went up, again went sideways for some time, gave us a good big fall once again, and then again ended near the day's low, only closed near the day's low. So what I feel is that market, even though we are above and we are anticipating one directional move or maybe a good trending move, which is there, but on an intraday basis, market is creating a lot of traps, right? It is trapping people who are going long. It is trapping people who are going short. There is a lot of trapping which is happening, and simultaneously, the VIX is down almost every day. I believe today also VIX was down more than 2% and it's around 11.94. Uh, there is a linear decay in option, and option buying is not giving a good yield on the capital that you are deploying for the trades, right? Because the point movement, even if the spot is moving because of the low VIX or the drop in VIX, the option premiums are not moving by the same amount in which they should usually move under ideal scenarios. So, my suggestion to people who are new to trading or who do not have a good amount of experience in trading in options or the derivatives territory, it would be a good decision to stay away from the market for some time. So there has been a issue with regards to the liquidity as well because of the SEBI's direction on banning Jane Street, the FPI. Again, those are matters of speculation, whether it is the liquidity issue which is causing these spikes or whether they are still carrying on their trades because these are the signature moves uh, which were in the SEBI's newsletter, which they had published, was about the market holding up near the day's high and and then dumping near the day's end. So that was the modus operandi. So we do not know. Uh, but then again, these are news and they will come and go. And what will forever remain is price action. And right now, the price action is not clear. So anybody who is new or inexperienced in to trading derivatives, my suggestion would be to stay away for quite some time. Let the market settle, let there be some more clarity, and then we'll be planning our trades. Now this level is no longer important for us because this was just the 50.5 to 618 of this up move which was there. So we'll be deleting this. I'll be also deleting this particular trade high. We can actually keep this around here. We'll put it across when we plan the trade setup. Now we'll plan the trade for tomorrow. Once again, a word of caution, or basically the disclaimer that I always have for expiry days. Tomorrow is the weekly expiry of Nifty. Anybody who is trading into Nifty weekly expiry, sincere request would be to not trade in tomorrow's expiry, but shift your trading to the next week's expiry options. If you are trading tomorrow and you are into option buying, that will, you might have to pay a little more higher premium for your entries or for your positions to take, but you will be saving a lot of capital in case the trend goes against you, or it goes even if it goes sideways, right? And in case if you have to hold a position for a longer period of time, it will be very, very helpful. So that's a very, very sincere and genuine request from my end. So in case if you take trading as a serious business and not just a gamble, please shift to next week's expiry if you are trading into Nifty options. This is what I personally do. I do it for, I would have done it today if I would have been trading. And that is what I do on expiry as well as expiry minus 1 day, except for the Hero Zero trade setup, which I have explained in one of the earlier or one or twice in the earlier videos. You can go and look for the weekly expiry special videos. You will be able to see the option expiry trades that I take post 2 p.m. only and only on expiry days. That is when, based on open interest and the change in open interest, the setup is based on that. And if I see something feasible or viable over there, and if I'm taking a trade based on that setup, that is only when I take the trade in the current weekly expiry, and that is a Hero Zero trade, right? Either I am going all in for the big move, which the momentum which I'm capturing. So basically, I'm targeting either short covering or long unwinding on the day of expiry post 2 p.m., wherein I get the options premium very, very cheap. And even if I'm losing the entire option premium, it will not matter to me, right? I will only be risking the net amount which I am willing to lose in the market. But the returns on these Hero Zero trades on expiry days, if you have a good amount of experience in it and you can read the data that the change in OI data, which is there very, very correctly, you should go for them. Anybody who is new here and has not experienced that, please go and watch the other videos where I've explained the strategy, and you can try to observe it for a couple of expiries before actually trying to trade on it. So yeah, after the caution, let's plan the plan of action for tomorrow. Now there are two ways to look at it, right? On a daily time frame, what we have is a kind of an inside bar. This is not an inside bar. We breached the height for a moment, but I will keep it like a good range bound candle, which is totally inside yesterday's range of yesterday's range. And as I said, there are two ways to look at it. As I always say, you try to talk to the market. So either this is a breakout and a retest of this particular level, or this will ultimately be a failed breakout, and then we will be seeing lower levels. So what exactly is it? That is something that we need to find out. And for that, what I'll do is I'll connect today's high with today's low, and I'll mark out the 0.5 to 0.618 zone again. Say, for example, market opens flat or with a gap up and we go up above this level. This is where I will be looking at taking a long entry. Uh, this will be a level of, I will actually be marking it as a zone. All right. And if we are going below this, I will be looking for a short entry. And when I say about this particular short entry, will not be looking at lower quantities, because right now, if this happens, this will be a breakout failure and we can go with our regular quantities. Apart from that, any price action suggesting bearishness around these levels, we can also look at creating a short entry, because then this will be a sign of a lower high again forming, and then we can head down. But this particular short entry, if I'm entering around these fib levels, will be the ones with lower quantities. For me, the biasness is still, for the time being, on the upside till we are not confirming, till the price action is not confirming that yes, this breakout is a failed breakout, and the trade that we were anticipating uh, of the pole and flag consolidation breakout, the prices will should go up. Uh, Till the price action is not confirming that, we will not be acting on that. So my biasness is still on the upside, and obviously, of course, needless to say, above this particular point also we are, which is today's high and yesterday's high, which will be a 2-day high. So if market moves up above this, we can expect a good move on the upside as well. But that is something which I'll not be marking because the closing is around here, uh, and the high is almost 80 points away. So let the markets reach around here, but that is something that you should keep an eye on. And as I said, tomorrow being the expiry, weekly expiry, please keep your positions light. Do not gamble, take planned trades, and look for price action confirmations before jumping into the trades. That would be my sincere and genuine suggestion to each one of you. And let the market stabilize for some time, and then you can again go back to your full trading, whatever quantity that you're trading. But for now, keep it light and trail tight. That rhymes as well, right? So I hope the message is loud and clear, and I wish you guys a good expiry tomorrow. I will see you guys again tomorrow post the market. This is your Nifty guy signing off for now. I'll see you guys again tomorrow post the market. Cheers and thanks for tuning in today. Thank you so much, guys.